When analyzing a chart, a candlestick gives us reliable visual information about what price is doing over a specific period of time. A combination of multiple candlesticks form a candlestick chart. This chart is used in technical analysis by crypto traders to make informed decisions on when to buy and sell a crypto asset based on the behavior of price seen on the chart. Hi, I'm Uncle Wealth. Welcome to Satoshi African Academy channel. So today we're going to be talking about a candlestick. This is just a basics about a candlestick. What do we need to know about candlesticks? First of all, we need to know that there are two kinds of candlesticks. The first type we have is the bullish candlestick, and the second one we have is the bearish candlestick. So when we say that price is bullish, we're just simply saying that price is going up, and when we say price is bearish, it means that price is going down. So a bullish candlestick will be associated with a price action that is going upwards, while a bearish candlestick will be associated with a price action that is going downwards. So how do we identify a candlestick that is bullish or bearish? Well, there's a way to know that. For a bullish candlestick, what distinguishes it is the opening price is below the closing price. And for the bearish candlestick, the opening price is above the closing price. So it's basically a reversal of the bullish candlestick. So this is just what you need to know. Once you understand this, it becomes very, very easy for you to identify a candlestick. Different traders, customize their charts to look different. So when you have these basics in mind, it makes it easy for you to identify the candlestick on the charts, irrespective of the traders' candle colors. All right. So visually, let's look at what the candlesticks look like. So we're going to start with the bullish candlestick. We're starting with the bullish candlestick. We said for a bullish candlestick, the opening price is below the closing price. So here is going to be the opening price let me zoom in a bit. Here is going to be the opening price and here this level up is going to be the closing price. So this level up here is the closing price and this level up here is the opening price of a bullish candlestick. And so most candlesticks have wicks, and these wicks stretch out above and below the candle body. So you have to see that as a part of the candle. All of them are not the same, but most times they have wicks above and below. Now, these are also important parts of the candle. This level tells us that this is the low price of the candles, and this level up here, the tip at the top, tells us that this is the high price during that particular period. So we have the high price, the closing price, the opening price, and then the low price. 4 of these prices help to form what we call the OHLC values. So basically, O stands for opening price, H stands for the high price, the L stands for the low price, and the C stands for the closing price. As simple as that. And on the chart, you can see, if you look up here, you will see that it is represented here, the OHLC values. So why it's fluctuating is because of the charts below. So it's reflecting each of these prices for every candlestick there. All right, so we are done with the bullish candlestick. Let's go to the bearish candlestick. The bearish candlestick. Now, we said in the bearish candlestick, the opening price is above the closing price. That is just the only difference. The high price and the low price remains the same. So basically what we are saying is that this opening price is up here, while the closing price is down here. But as for the high and the low price, they remain the same. They remain the same. The high and the low price remain the same. One other thing that would distinguish, you need to notice that most times the bearish candle will have a darker color depending on the trader in question. But on the basics, on the default mode, when you open a chart, when you see a chart, you will likely see the bullish candle as a green candle and a bearish candle as a red candle. So why do they call it bullish candles and the bearish candles? You know, they're attaching the names to the animals. Bullish is for the bulls. A bull, when a bull is attacking, it lifts up its head from down upwards. It goes from down upwards. While for a bear bounces from up to down. So that's just, you know, a guide on how these names come up. So, but you know, in crypto, you hear a lot of it. We say market is bullish, the market is bearish. So what that simply means is that multiple candles have come to form a direction where the trade is, you know, heading. All right. So now we are done with that. Let's go and look at what a candlestick looks like on the chart. Now this is the chart. We said multiple candles come together to give us the chart. So what do we need to see? Let's zoom in. You can see here, this is a perfect example. You can see most of these candles in this region, they have wicks above and below. So I want you to take a look at these prices here, these values here, and see what happens when I move the cursor on a candle. Look at here. The top, which is the high of this candle, that's a wick, is 0.06329, while it shows us the bottom here, which is a low, is 0.05772. But look at this price. The price here is 0.05893, while the price here is 0.06015. So 0.058, 0.06. What does that tell you? Since the price here at this point is lower than the price here, we say that this is a bullish candle. So if you know that the gray candle is bullish, you definitely know that the black color candles are bearish. So, but the same thing applies for the high and the low price. The high, this is where the high, this is where the low is, and this is where the high is, the high point. This is going to be the opening price above the closing price. The closing price will be the price at this point. While for a bullish candle, this is going to be the high price, and this is going to be the low price, and this is going to be the opening price, and this is going to be the closing price. So that's basically it on candlesticks. Now in another lesson we'll see that multiple candlesticks can come together to form a pattern that acts as a signal for what price is going to do next. Though we don't really rely on one signal, it's always good to have confirmation from other signals when you enter a trade, but it's good to have an idea of popular candlestick patterns that, you know, can point to where the direction of the market will be next. What you need to also understand is that in trading crypto, just like trading Forex, there is no certainty. You cannot be 100% certain. Price will do what it needs to do. What we just have is probabilities. We look for scenarios that has happened before that are likely to happen again. So that is basically it. So like I said, there are different candlesticks, and these candlesticks, you know, are shaped differently, but the basics still remain. All of them have their OHLC values. So you can see here, this one has a high and a low. This one doesn't have a high and a low. This one has a high but doesn't have a low. So you can see all these candles, you know, they are different. So with that said, I will see you in the next one. If you've gotten value from this video, please like this video, subscribe to the channel, and turn the bell notification on so that whenever we post our content, you will be the first to see it. And if there's anybody who still needs to learn about crypto around you, we highly appreciate you as you share this channel with the person. So see you in the next video. Bye.